like to do is create a demand line just showing the absolute lowest price where there's demand and where people enter the market. And then once I connect those points, look for wave structure. Sometimes when I'm doing a speed run through the charts, I won't actually see the harmonic on first glance. For instance, I'm on a daily time frame now. This here just looks like a laddering effect where basically stellar's creating different levels. But if I zoom in on the 5-day, now I can actually see a proper harmonic structure, which wasn't otherwise visible on first glance. So here we go. You've got basically the 886 over here, and you have a proper shark structure. So you wouldn't have seen this on the daily, but on the 5-day you do see it, and it does actually get the reaction at the end of the 5-day structuring. So while this first wave is printing, it's launching your next harmonic, and we call that principle of harmonicity, and that's what it would look like. There's your main harmonic, and there's your next harmonic. Combined, this is harmonicity, where you've launched your next wave structure mid-structure on the first harmonic. Here's a complete chart of mirror protocol. I don't know what it does, but I do like reviewing wave structures, and you'll note that proper harmonic traders, they use all time frames. You can find harmonics on the weekly structure the same way you could on the 1-minute structure. Here's an example. So here's a daily bullish bat pattern closing at the 886. And you'll note when it closes, it elicits the right response in the pattern reversal zone. It gets a 50% pump, which is what we're looking for as traders. Quick in and out. Within 2 weeks, you get your 50% return, you're out. Now, if you zoom in here, it doesn't have 30 candles, but if you zoom in on the 4-hour, you'll note that there is a 4-hour harmonic here. However, the difference with this one is it's not a proper harmonic ratio. So it has the same stance like the bullish bat, but it extends to basically the 113. Bats close at the 886, and based on this first retracement near the 618, it should have closed at the 786. So this final wave is an extended wave, and it's closing at the 113, which is not aligned with any formal harmonics. So the reaction you'll see coming off there is from this D point to this swing high, 20%, and then it proceeds to sell off and then creates a new all-time low here. So it shows you that if you have an improper harmonic wave structure, these patterns typically don't play out. And if you zoom in on the 1-hour, even more, now you have an example of a 1-hour structure, which again, if it has the right ratio, it works on every time frame, but it has to have the right structure and ratio. Again, you have a bullish shark pattern here, where the C point ends a little bit above the A, and it's over 382 on the first retracement here, closing at the 886. When you zoom in, you can see in the pattern reversal zone over here, you elicit a 30% move and then a sell-off.